Sources of financing. Financing is a critical aspect of financial management that involves acquiring funds for a company's operations, growth, and investments. The main sources of financing include debt financing, equity financing, and hybrid financing. The choice of financing depends on several factors, such as the type of business, the stage of growth, the risk profile, and the cost of capital. This video provides a comprehensive review of the sources of financing and financial management. Debt financing. Debt financing involves raising funds through loans or bonds. Debt financing has several advantages, such as the interest paid on debt is tax deductible, and debt holders have no ownership rights or control over the company. However, debt financing has some disadvantages, such as the risk of default, the cost of borrowing, and the impact on the company's credit rating. The main sources of debt financing include commercial banks, bonds, and other debt securities. Equity financing. Equity financing involves raising funds by selling shares or ownership in the company. Equity financing has several advantages, such as no obligation to repay the funds, no interest payments, and the potential for capital appreciation. However, equity financing has some disadvantages, such as dilution of ownership, loss of control, and the cost of issuing shares. The main sources of equity financing include angel investors, venture capitalists, private equity firms, and public markets. Hybrid financing. Hybrid financing involves combining debt and equity financing to create a customized financing structure. Hybrid financing has several advantages, such as flexibility in terms of repayment, lower cost of capital compared to pure equity financing, and reduced dilution of ownership compared to pure equity financing. However, hybrid financing has some disadvantages, such as complexity in terms of structure and documentation, and the risk of default in case of excessive debt. The main sources of hybrid financing include convertible bonds, preferred stock, and mezzanine financing. Factors affecting the choice of financing. The choice of financing depends on several factors, such as the type of business, the stage of growth, the risk profile, and the cost of capital. For example, startups and early-stage companies may prefer equity financing to avoid the burden of debt payments, while mature companies may prefer debt financing to take advantage of tax deductions and lower interest rates. The risk profile of the company also affects the choice of financing, as high-risk companies may face difficulties in raising debt financing, while low-risk companies may prefer debt financing to reduce the cost of capital. Conclusion. Financing is a critical aspect of financial management that involves acquiring funds for a company's operations, growth, and investments. The choice of financing depends on several factors, such as the type of business, the stage of growth, the risk profile, and the cost of capital. The main sources of financing include debt financing,